Good afternoon, everybody. This is Brian Dewhurst with Uncommon Wealth Partners, bringing you your market update on Halloween. It is October 31st, 2017. All right, we're looking at one of our set of indicators. This is the moving averages up here. These 5 green lines are shorter-term moving averages. We have the S&P 500. We're looking at that monthly chart. We're zoomed out here trying to look at and identify longer-term trends. And then we have this gap that we like to see between the shorter term and longer term moving averages. The longer term moving averages identified in red. So we have price on top, then the green, then the gap, then the red. That's what we want to see. Historically, when we've seen that longer term, it's led to higher prices. So this chart is looking healthy as we look forward and as we look backwards. So taking a view of the data today, looking at the facts. So let's keep moving. We've got some new stuff to show you today we're excited about, so we're going to move rather quickly here. We want to see blue candles on top. You see this chart only has blue or red candles. Obviously, blue is bullish, red is bearish. And we have blue candles above the white line, which is a 21-day moving average. And we have our shorter-term charts that pull in data here, which give us a red light, as you can see here in the financial real estate collapse. And then the tech bubble, we have red lights here. You see we're all green right here. And so historically, green has led to higher prices. And then we have our other indicator on. We saw a squeeze building up for almost, over a year. And now we see this growth in the market, growth in momentum. And even when we see this color shift from teal to dark blue, it doesn't mean that our trend is over. If we look up midway here, that trend continued for another year, making higher prices with the S&P. So different change in color from the teal to the dark blue, but it doesn't signify that the trend is ending. And then finally, on the charts that we normally review with you guys, this is a similar chart to the one we just looked at, but we have a little bit different candle color. We have green, yellow, and red. Obviously, the traffic light analogy comes into play, and that's kind of what this is designed to do. And you see that we have just kind of gone green here over the last 5 months. And we look past, we've seen a green trend that can last multiple years. This one was only about a year. And then the tech buildup, we saw several year kind of a green progression. So we just see the green here, and we have this aligned with our similar squeeze indicator. So you could kind of see here, through Brexit, and this kind of is about a year and a half, 2 years where the market traded sideways. The pressure was building up and the market declared up. And you can kind of see here when this did its last time, these are multi-year trends when these established. So we are just kind of getting into a new trend here. So anyways, those look healthy. Moving on, we wanted to show you kind of a new chart here and keep things in broader view. The market trades in what we call super cycles, and those super cycles can last from anywhere to 15 to 20 years. And we kind of just came out of a super cycle, over the last few years. And, we see this identified by this blue box. This is a 17-year consolidation period. We're still on the S&P 500 monthly. And I've identified this trading box or this trading pattern or consolidation pattern with this blue box here. And then you see down here in 1980, when the market really broke out, that was 1980 to a high of 2000. And so you can kind of read here, the S&P 500 on March 24th, 1980 closed at 99.28. and rallied to an all-time intraday high of 1,552.87 on March 24th, 2000. That was a return of 1,464.13%. And so what we're trying to show you guys is the market can work in long-term trends, and we think that, identified by this breakout here, the S&P is trading into a new range, and we're seeing that by the S&P 500 continuing to make higher highs. So we kind of thought this was neat, kind of a way to identify the trends. And now we're going to zoom out even more. So now we're taking it back to 1960. So you have a 20-year consolidation period down here from the 60s to the 80s, where price traded sideways for 2 decades. And so similarly, after that, we see the breakout from the box here, just like we saw the breakout from the box here. And we see a 17 to 20-year trend here on the S&P 500, depending if you go back to this low in 1974 to the high in 2000. That's a 26-year bull market move. And so what we're trying to look at is facts and the data to help shape our thesis and what trend we're on. The market can only trade in three trends. One is bullish, as you see here from point A to point B, which are the ones we're looking for. Bearish, which you kind of see here, this would be the tech decline in 2000 to 2003. And then the financial decline, in basically 07 to the bottom in March of 09. And you can see a sideways consolidation, which when we zoom out is more helpful to see with these boxes. And so we really hope this chart and kind of the information that we're sharing with you is helpful to help you zoom out and take a longer term view of the market. We know there's a lot of headline risk and a lot of headlines coming at us on a daily basis through social media and news outlets. And we want to use facts and data and charts and look at those data points and facts, how they've looked historically, and the conclusions we can draw moving forward based on the facts at hand. So thanks for watching, guys. If you like our video or subscribe to our channel, we're going to be doing more of this. Thanks for watching. Bye-bye. The material in this video has no regard to the specific investment objectives, financial situations, or particular needs of any viewer, and is not to be construed as a solicitation or an offer to buy or sell a security or any other related financial instruments or products. Nor should any of the content be taken as investment advice in any way. Any opinion expressed in this video is subject to change without notice, and Uncommon Wealth Partners, LLC is not under any obligation to update or keep current the information contained herein. Uncommon Wealth Partners, LLC and its respected officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. Uncommon Wealth Partners does not accept any liability whatsoever for any losses or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decisions.